this is Demel Gonzalez of Heartwood Financial Services. Hey, thanks for joining us for our financial education video series on crypto assets. Now, this is part 3. This is the final one. We've gone through part 1 and 2, which talked about why. Number 2, a little bit more about blockchain and the different crypto assets that are out there. So this one, part 3, is going to be more about, okay, I'm kind of interested in this. Now, how do I actually invest in it? There's a lot of different ways to do it. Some are very simple. Some get a little bit more involved. So I just wanted to go over with you some pros and cons of each of the different ways to do it. And of course, this is not all exhaustive, and this is all that, all the information that I have for you. There's probably a lot more out there, but hopefully this will be helpful, and I hope you guys enjoy. All right, so you want to own cryptocurrency. Let's talk about the different ways to do that. Basically categorize it into 3 different things. So first of all, you could buy cryptocurrencies directly on the exchanges. You could go ahead and buy stocks that invest in companies that own cryptocurrencies or deal with cryptocurrencies or have the technology for the blockchain to exist. And then the third way is you can buy ETFs or funds that either have futures or the actual coins, and you can do this also in your brokerage account. So let's get right into it. Okay, let's start with buying the cryptocurrencies directly on the exchanges and the pros and cons. So first of all, they're very easy to set up. I mean, some of these are apps on your phone that you can download and start trading cryptocurrencies right away. It's almost too easy. The other pros are, once you own the cryptocurrencies, it's kind of like owning a stock. There's no management fees or anything like that in addition to that typically. And you also, depending on the exchange, you have umpteen amount of different cryptocurrencies to choose from. Now, I'm not saying they're all worthy of your choice, but there are lots that you can choose from. Now, on the con side, a lot of these exchanges have had history of hacks and potential fraud that could be out there. It's kind of like the Wild West when it comes to these different exchanges sometimes. The transaction fees when you buy the cryptocurrencies can be rather high. I've seen anywhere from 1.5% to 1% in that range, and the execution of the price is kind of suspect too. You might see it quoted at $1,000 and then you buy it at $1,100, for example. So this needs to get tightened up a little bit as well, I feel. The separate accounts are not currently regulated by the SEC. So one of the biggest ones is Coinbase, one of these exchanges, and they're still not completely regulated by the SEC. So there's certain issues there. The SEC has certain standards and audits, things like that, which give us a little bit more of a comfort with these exchanges that they don't have. And of course, you've probably heard the stories of people that bought crypto and then forgot their password or their key. So it can be a little complicated if you want to try to maintain the cryptocurrencies outside of the exchanges. It starts, you almost have to be pretty good in the techno world to know how to do that. And of course, you always have the risk of losing the key or password. And then the last thing, although this is evolving, some places you can actually buy cryptocurrencies in an IRA, but the big ones are still not doing this. And as you can imagine, if you do that, there's going to be extra fees that go along with that as well. So not the easiest for you to use your IRA money. So if buying the crypto assets directly from the exchanges makes you a little nervous, which I can understand why, the other option is you could say, well, the heck with all that. Let me just buy some stocks that deal with crypto or blockchain technology. Well, that's not a bad idea. You can obviously do that directly in your brokerage account, pay very low costs or commissions because, most places now you can trade for no commissions. So it is a pretty attractive option. The cons there, of course, is that you don't have the direct exposure to the crypto assets. So if if you really like Bitcoin because of the idea that it could be a potential alternative to gold or fiat currencies or something like that in the future, investing in stocks that deal with blockchain and the such may not be exactly what you're looking for there. Of course, you're also then taking on the risk of the management of that particular company. So there's other risks involved on top of the potential risk of the crypto assets. And then, of course, volatility of these stocks, because they tend to be tech-type stocks, tend to be much higher than stocks like in the S&P 500. Okay, and the third way that you can buy cryptocurrencies or crypto assets is you can buy ETFs or funds. Now, I leave funds kind of vague because there's different varieties out there, which we'll get into a little bit here. So first, let's start with the pros. So on the pro side, again, some of these ETFs and funds, you can actually own a lot of different coins all in one basket, which I think is kind of cool. Or you can just buy one that owns just one of the coins. So you have some interesting choices there. You can also buy these types of securities directly in your brokerage account and in your IRA, which is kind of nice. Less potential for fraud in a traditional brokerage account. This is more my opinion, but these big brokerage companies like Schwab and Fidelity, TD Ameritrade, they got a lot of experience on dealing with transactions and security. Very robust companies that have been around for a while. So I just feel a little bit more comfortable holding it there, and also along with your other investments, which keeps things simple, right? And then finally, some of these ETFs are now registered with the SEC, although some of the funds are not. And so that will lead us into the cons here a little bit. But you can see there's plenty of cons here too. So some of these funds hold futures of cryptocurrencies, not the actual coins. And there's some pros and cons there too. I think there's actually quite a few cons there that, if you like, I can get more into with you with these futures. They also have higher management fees than like your typical ETF or mutual fund. A lot of it is because there's a little bit more to it. They're more complicated, but they can be in the range of 2% or so, which is a little bit steep. Complexity of those premiums and discounts. Especially the non-ETF funds. There are over-the-counter traded funds, and some of these have pretty big premiums to what the actual coins are worth, and sometimes they have big discounts to what the actual coins are worth. So that's something that you have to take a look at as well. Just another layer of complexity added to this. And finally, some of these over-the-counter trusts, they report to the SEC but are not yet registered with the SEC. And this is something that, if you read the literature on some of these trusts, they're actively trying to get the ETF status so that they could, be registered with the SEC and be a little bit more mainstream. I'm not sure if that's going to happen. It did happen with the futures ETFs, so there is a chance. And if they do get approved, that would be very, very good, probably for crypto assets in general, because that's really joining the mainstream, and that would be pretty big. But, still no approvals have been made, and who knows what will happen with that. Okay, so that concludes our video and really our whole series on crypto assets. I hope you guys enjoyed it. I was a little skeptical about bringing it up. Didn't want to open up a can of worms with this topic. But it is something that I think we should learn about and educate ourselves about. So I hope you guys found it very helpful. By no means is everything I brought up completely exhaustive of this topic, but I hope that it was at least a good learning experience for you. And I want to leave you with the bottom line of what I would say if you were to ask me what I think about crypto assets. So first of all, I would say that these cryptocurrencies are very volatile. So invest with knowing that you could see volatility that is much more even than when you see it in stocks. There's still a lot of fraud and scams and worthless coins that are out there. So be very, very careful with what you invest in. Obviously, do your research. Make sure it has an actual technology that backs it, that has some use. Okay. And of course, don't invest more than you can afford to lose, because these assets, they could go to zero in some cases. So in a lot of cases, they probably will. So just be careful with that. And of course, if you do invest in some of these, I would recommend to do no more than that 1 to 3% range, maybe to use it as a portfolio diversifier. Okay? Thanks, and we'll see you later.